Hey everybody, so in this video I wanted to talk about earnings in general and I wanted to talk about Microsoft Q4 earnings. Now that is actually going to happen on Tuesday the 26th. Now before we go into this, I just wanted to say, these type of earnings videos take me quite a while, 1 hour minimum. So, if you guys can just show your appreciation, like, thumbs up, um, subscribe, comment, all of that stuff, I would really, really appreciate it. Now, going right into it. So, when we're looking at earnings and when they do drop, where we're going to want to go is we're going to want to go on the Microsoft Investor Relations page. We're going to want to go on earnings releases. From here, we're going to do press release and webcast. And that takes us to this page right here. So generally, we see all this nice information on the right here, but we're not going to see all of this when the new press release drops. So essentially what we're going to get is we're going to get this press release right here and the financial statements. Now the earnings call happens a little bit later, so that's when we get all of this other information. The 10Q, they could file at a later time. So this usually comes in, normally at the end. That's usually last. So the first thing we get is press release, financial statements. The rest all comes later. And generally in this press release, in this main page, they're going to give us nice little highlights right here. But what they don't talk about, and they generally don't talk about this sometimes, is the forward guidance. So what I want to focus on is just kind of looking for that guidance. So we could go on to the press release. And then what I can do on this press release is I could do a control F function. Now I could look up either guidance or I could look up Q4. And I'm going to look up guidance. Now I just want to remind you guys that companies don't always work off the calendar year. They have their own fiscal year. So right now Microsoft is reporting Q3 earnings for their fiscal year. Now that is actually going off of our Q1 calendar year. So when they report Q4 quarter results, that is going to go off our Q2 calendar results. So now just doing that control F function, we're going to look at guidance. Now they give us this nice little section right here. They titled it Business Outlook. So here it says Microsoft will provide forward-looking guidance in connection with this quarterly earnings announcement on its earnings conference call and webcast. So we are shit out of luck. And essentially what you see in the after hours is everybody, buying, selling based off the quarter results, but they still don't know what the guidance looks like. So essentially we see a second round of that when the conference call happens and when the analysts and the CEOs start talking together, asking questions, they talk about their forward guidance. So this information is going to come in later usually. And here, they actually gave us this nice little PowerPoint presentation called Outlook. Now, a lot of companies don't do this for you, but Microsoft does. So this is actually kind of nice. So when I do click into this, get this nice little PowerPoint, it's 4 frickin' slides. So you can't tell me that this is difficult for you to read because it's 4 frickin' slides and 3 of them are useless. So this is the cover page. This is some useless information. This is the bulk of the information. This is a blank copyright page right here. So what we want to focus on is page number 3. So here they actually give us a breakdown of revenue. So they actually broke this revenue down into productivity and business processes, intelligent cloud, more personal computing, and they gave us low and high revenue estimates for each of these. Now they also gave us cost of revenue. Generally, you see this kind of broken down, but here they just gave it to us in a bulk amount. Same with operating expenses. You see this broken down, but here they also gave it to us in a bulk amount. We have other income and expenses. Now these are not related to actual business operations, so they keep this separate and call it other. And then we get effective tax rate. So what do we do with all of this information? I mean, this is all great information, but it's pretty useless if we don't plug it into a template of some sort. So how do we actually get this template? Well, all we really need to do is we need to look for a former example. So we're going to go back here on this press release page, and they gave us these nice financial statements right here. We're going to click right into that. Now here, I'm on this little tab. There's several tabs here. I'm on income statement. This is the Q3 income statement. And they call it a consolidated income statement because, you know, it's consolidated. They don't always have it all broken down for us. So in that PowerPoint presentation, they broke down revenue for us into those 3 segments. Here, they just call it product, services, and other. So when you add these 2 together, you get total revenue. They call this the top line because, as you guys can see, it's in the top of the income statement, top line. And kind of note that every single time we have a subtotal, they introduce this little line right here. Now, when we have a total, you guys can see they have this bolded line right there. But, you know, this could actually just be a double line, which actually just looks like a bold line. But, you know, I can't really tell. So just going right here, we have these 2 revenues added together, gives us total revenue. Cost of revenue, they broke it down into product, services, and other. No surprise, because it's the cost of the revenue. This was the revenue, so this is how they broke it down. Total cost of revenue is this number right there. So gross margin, they didn't give that to us in the PowerPoint, but the way that you calculate this is you get total revenue, subtract it by cost of revenue, you get gross margin. And then from here, they have 3 of these expenses right here. They're all operating expenses. So here it's broken down. In the PowerPoint, they just told us operating expenses. So when we add these 3 together, we got to subtract this number right here, the gross margin, by these 3 added together. And that gives us the operating income. From there, we're either going to add other income or we're going to subtract other expenses. And then that gives us income before income tax. This is the number that we are going to tax. And here you can see the tax amount. After we subtract the tax, that gives us net income. They call this the bottom line because, as you guys can see, it's at the bottom of the income statement. So now they give us additional information. They give us shares diluted. They also give us diluted earnings per share. How do we calculate this? Well, we get this net income number. We divide it by the diluted shares. That gives us the diluted earnings per share. So I like to use diluted because it's considering all of the diluted factors. So that's convertible debt, that's employee stock options, you know, things of that nature. So now, you know, we have all this rich information right here. So following that template that we just went over, we are going to make ourselves a pro forma income statement. So now this is going to make you feel like a genius if you follow along and you actually do this yourself. Now I've been talking for quite a while, so I need to take a little sip of coffee right here, so don't mind me. Alrighty. So now we're going to estimate Q4 information. Now the things that we want to look at in specifics is going to be the same things that they're talking about in these highlights. So as you guys can see, you know, they're highlighting net income, year-over-year change. They're highlighting operating income, year-over-year change. Revenue, year-over-year change. Diluted earnings per share. So these are the metrics that we really want to focus on because these are going to be the highlight items that they're going to highlight when this press release comes out. So just keep that in the back of your mind. So now we're going to make this pro forma income statement. We have low estimates, we have high estimates. So we're going to make calculations for both of those. So starting with the top line, we have revenue. Now they gave us low and high estimates for all 3 of these revenue segments. As you guys can see, intelligent cloud, productivity and business processes, more personal computing, they gave us low estimates, high estimates. So right here in this income statement, I just plugged it all in. Now if we add all of these together, we get total revenue. And then they gave us total cost of revenue. So they said that number was 16.6 billion to the low side, 16.8 billion to the high side. They also gave us operating expenses, 14.8 billion to the low side, 14.9 billion to the high side. So starting with cost of revenue, I plug that in. Now I take out my total revenue, I subtract it by cost of revenue. That gives me gross margin. From my gross margin, I subtract the operating expenses they gave me, and that's going to give me operating income right here. Now they also gave us other income and expenses. That was 50 million to the downside. So remember that I'm putting this in billions. You could put it in whatever you want, but I'm putting it in billions. So all these numbers right here, all in billions. Now from that, we just subtract operating income by the number right here, or I guess we're adding because we're subtracting here already. So basically, my earnings before income tax to the low end is going to be 20.95 billion. To the high end, it's going to be 21.45 billion. So from here, I take 18% of that, and then I subtract it from the earnings before income tax. So essentially what I'm doing is I'm taking, 82% of this number, and then that's essentially giving me the net income. So this is the bottom line. As you guys can see, I put a little double bottom line right there because I'm a stickler for format. So right here, total net income is 17.18 billion to the low side, 17.59 billion to the high side. So what does this all mean? Well, it means not a whole lot if I'm not comparing it to a prior time period. So generally when they do year over year calculations, they're comparing to the quarter of last year. So right now I'm in Q4 2022 according to their fiscal year. So we're going to look at Q4 2021. And where do I find this information? Well, they gave me all of that information in this financial statement right there. So right here in this financial statement, they have multiple tabs right here. So I'm going to move over to this quarterly income statements right here. Now I'm going to have to note out something for you guys. Now this is amateur hour for Microsoft. This is a multi-billion-dollar company, and they're making tiny little mistakes like this on their investor relations page with their financial statements. So here we have zero. How can we have zero? I mean, let's go back. Let's look at what this actual line item is. Total revenue. So here they're saying Q2 2022 revenue is 0. So that's clearly wrong. What we're supposed to do is we're supposed to add these two numbers. Also right here, this is also 0. Well, what the hell are they doing? I mean, let's see what this line item actually was. Total cost of revenue. So how can we have total cost of revenue as 0? Somebody clearly messed up, you guys. They messed up right here, they messed up right there, and they messed up right there. So when I go and I copy all this information, I put it into my own tab right here, I need to go and fix this because some idiot basically couldn't do this math. Now, this is a multi-billion-dollar company. I think this is pretty shameful. So essentially what I did was I copied all of this information and I put it into my own Excel spreadsheet because these guys, they don't let me download this. See right here, viewing only, can't make changes. I can't download it either. So essentially right here, I just copied it all and I created my own little tab. So what I'm doing is I'm essentially grabbing all of these numbers from Q4 2021. So let's see, where is Q4 2021? It is right here. So I grabbed all of these numbers, I plugged them right in here. So that's how I got all of this, just so you guys know. So let's go ahead, let's actually compare. So when we actually go and we compare, I mean, we can see this breakdown and everything is actually going up, even if we're just looking at the low end. So if we're just looking at the low end, productivity and business processes, this is up 13.34% year over year off their expectations. Got to make that key distinction right there. This is expectations. Intelligent cloud, this is actually going up significantly, 21.4%. That's a lot. More personal computing, this segment is looking pretty weak. It's only 4%, it's such small. So if we're looking at total revenue, we're looking at 13.4%, 13.54% on the low side, 15.28% to the high side. Now, how do we know if this is good or bad, you guys? I mean, this is what we do. What we do is we get all of this historical data and we calculate the year-over-year changes. So here I have this little revenue, and how am I calculating these year-over-year changes? Let's actually click into the formula. It's H5 minus D5. So if we're looking at H5 right here, that's total revenue. H5 right there minus D5. So I'm subtracting from the prior year right here. So that's D5 right there. And then I'm dividing by this year as well. So this is the base year. So I'm constantly doing that. Now I drag that formula across all of these guys, and I can kind of look at their revenue growth year over year as these years go on. So here we're generally seeing like 17, 18. Here we had like a bad quarter. So generally in the last few quarters, we were seeing like 15 to 20%. So if we're expecting something like 13.34 or 13.54 to 15.28, that's kind of coming in on the weaker side, as you guys can see. The last quarter we got about 18.35%. Quarter before that we got 20.9%. Quarter before that, 21.97, basically 22%. So if we're coming in around 14% to 15%, and that's just not looking all that great. So basically right there we compared their total revenue. So now we have their operating income. This is expected to grow about 10% to the low side, 13% or 12.6% to the high side. Well, let's take a look at their history. So operating, we have operating right here. So if we're looking at the last few quarters, we're looking at about 20% here, but this went as high as 42%. So, we're hanging around 20 to 30% on average. Now, what are we forecasting? We're forecasting operating income to be 10 to 13%. So that's really, really bad, you guys. That's pretty damn weak. Now, let's take a look at net income. So we're expecting 4.37 to the low side, 6.87 to the high side. Let's go ahead and look at this. So here I have net income. Last quarter came in pretty damn weak at 8.22%. Quarters before that were looking great. We're getting like 21.35%, 47.59, 47, 43, 32. So this is actually looking pretty damn weak. So this explains why Microsoft is falling so much in their share price. It's just because, their margins are falling significantly and their revenues are falling as well. And now, sometimes you have to question, hey, guy, are your numbers right? Well, I could have a pretty awesome way to check this. All I have to do is I have to look at their last press release and fact check it against these actual earnings right here. So it says revenue increased 18%. Well, let me go and check that. So did revenue increase 18%? Yeah, 18% right there, the last quarter. And then let's go ahead, let's put that back again. Operating income increased 19%. Let's go back, let's look at this. 19.45%, okay. Net income increased 8%. So that's following gap. Let's go ahead, let's look at this. Oops. So if we're looking at this, that's 8.22%. So as you guys can see, I am calculating my numbers correctly because I compared it to the earnings release. So now let's go back here. And we're going to calculate diluted earnings per share. So when I'm calculating this number, here is the assumption that I need to make. Now, this is not the company giving me information. This is me making my own judgment. So this is where things get a little bit blurry, you guys. But generally, this is just a ballpark. So when I'm making this assumption on shares of diluted shares outstanding, I'm just going to make a judgment call. I'm going to say it's going to be right around 7.513 billion. How did I come up with that number? Well, I'm going to show you guys. So we're going to go back. We're going to look at their income statement. Here we have the diluted shares as 7.534 billion. Now what I'm going to do is I'm going to pull up their prior quarter in the SEC filings. So right here, I'm going to move this tab over right here. Now here, as you guys can see, their diluted shares outstanding was 7.555 billion. Now I'm comparing this number to the most recent quarter, this number. So it actually fell about 0.021 billion. Now what I'm going to do is I'm also going to take 0.021 from this number, and that is going to give me 7.513. So this is the assumption that I'm making, that the shares diluted is going to go down by the same amount. So working off this assumption, I can actually calculate a low estimate and a high estimate. So as you guys can see, my low estimate for earnings per share, 2.29. High estimate, 2.34. What came in last year for Q4, which we're replacing in the trailing 12 months, is 2.17. So what I'm going to do is I'm actually going to take something in between this when I'm calculating my trailing 12 months. So when I'm calculating this trailing 12 months, I have Q1, Q2, Q3, Q4. Now Q4, this is replacing the prior Q4 right here. So this would have been 2.17, but I'm replacing it with the average of these. So I'm just saying, you know what? If I'm just taking something in between, this is going to be 2.32. So if I'm doing the trailing 12 months earnings per share, just a reminder, that is the last 4 quarters of diluted earnings per share. So when I add this all up, that gives me a trailing 12 months earnings per share of 9.73. Current share price, 260.36. That gives me a PE ratio of 26.76. So is this good? Is this bad? What is this? Well, you might argue that, this is kind of a high PE ratio to be paying for a company that's growing at around 13.34 to 15% revenue year over year with declining margins, as you guys can see. So here, we could see these declining margins, significantly declining, and the bottom line significantly declining as well. Revenue declining as well. So let's go look at historical PE here. So historically, Microsoft trades at a pretty rich PE, somewhere around like the mid 20s to the high 30s. So now, we're going to be around, let's see, what was that number? So we're expecting 26.76, assuming that that is the share price. So that's actually pretty, I would say that's kind of high, If we're being conservative, we probably want to look at the low 20s. So ultimately, how earnings is going to play out is really going to rely on the next quarter guidance. Are they even going to give us guidance? If they don't give us guidance and they report something along the lines of this, well then I think ultimately, you could see it as a negative because, our net income is falling. This year over year rate of change, it's falling. And, revenue is falling. We're looking at 13.34 to 15% when generally they're usually in the high teens or the low 20s. So that would be a cause of concern if they didn't give us guidance. But, I'm assuming that they are going to give us guidance, and, how the actual share price reacts is going to rely a lot on that guidance number because they already gave us guidance for Q4. So a lot of people have the same numbers as me. They're making the same assumptions as me. So if they give us those new numbers, then, we could recalculate these assumptions based off of those new numbers. So let's just go ahead. Let's look at share price real quick, see what's going on here. So I'm making this very simple. I'm not putting moving averages. I'm not putting any of that. So if I just take a resistance trend line, I'm connecting these tops right here. Now these right here are kind of a fake out, It broke out, fake out, sold off.
fake out, sold off. You guys can see that this is the actual trend line that we're following. Now here, we broke out, double top, sold off. Here, we're breaking out again. So where is this going to go? Hard resistance shows up at 268.41. If we get a good earnings report and we just break through that, that's going to be a pretty significant breakthrough. And then the next line of resistance we're going to see is going to be this 277.60 area. As you guys can see, it was former support right there. We also had support right around here as well, but we also had these crazy moves to the downside. These are definitely outliers. So I would say that the main resistance shows up right around 277.60. And in the shorter term, it's 268.41. Now we also do have this downtrend line or this trend channel. So, if we do sell off in the coming days, let's see if we bounce off this. That's essentially what I want to see. If we cut underneath this, that could be a little bit concerning. And let's say earnings is decent and we just rally a little bit. Well, are we going to break back above this? That's the question. If we do just get a sell off after earnings, well, then support is going to show itself right around 242.74. If we sell off below that, support is going to show itself at 235.67. If we sell off below that, support is going to show itself at 225.08. So now I want to introduce some moving averages. So where are we right now? We're essentially having the 20-day moving average and the 50-day moving average converging. So, we're going to have to see, do we just have a sharp sell-off? Do we have a sharp rally? 200 moving day average is all the way up here. So we're far below 200-day moving average. So this is still in a solid bear trend.
So ultimately, just my takeaway is if we're just looking at this next quarter of earnings, it doesn't look all that great. I mean, we're seeing revenues decline, all of that junk. So what we really want to focus on is what that guidance is going to be. And obviously, they could break out of their expected guidance for this quarter. So we'll see how that plays out. And I'll definitely try and report that when it does come out. So if you guys did enjoy this video, definitely leave a like, leave a subscribe, leave a comment, all of that stuff. And have a great one, you guys.